Today, we will talk about gold as good investment. The price of gold often rises in times of crisis and higher than usual inflation, making the yellow metal attractive to investors seeking securities that can endure economically challenging times. Cash and several other asset classes, by contrast, lose value over time due to inflation. Gold is also more liquid than real estate and investments, such as retirement accounts. However, the reality of investing in gold is more complex than it may seem at first. Reasons gold may be a good investment. There are several reasons you might consider investing in gold, regardless of economic conditions. Such is the reason gold has been a popular investment for thousands of years. It has many attractive and unique qualities. 1. Gold can preserve wealth. One of the best features of gold is that it preserves wealth. Gold has been a valuable resource for thousands of years, and multiple civilizations and empires have come and gone. Some of those people had their own currencies, which today only have historical value. Gold, on the other hand, still has monetary value and can easily be bought and sold. Gold can, sometimes, protect against inflation. Gold is a popular investment among those who lose confidence in governments and their respective currencies. But it can also be a good store of value during periods of inflation. There are many reasons this can occur. For instance, consumers may not want to spend their money on goods when prices are rising rapidly, so they decide to purchase gold instead until inflation rates stabilize. Another reason gold often performs well during inflation is due to the fact that gold is priced in US dollars. Thus, when there is inflation in the US, the dollar weakens, making it cheaper for those with foreign currency to buy gold. This may cause the price of gold to increase. Hence, gold becomes a better way to set money aside than cash. The World Gold Council noted in July 2021 that gold has a surprisingly poor correlation to the Consumer Price Index. Since the 1980s, there has only been one time when gold has posted strong returns amid surging inflation, 4% or more, a short period between 2007 and 2008 during the financial crisis. 2. Gold helps you diversify. Another benefit of gold as an investment is diversification. Reducing risk is key to a successful long-term investing strategy, and gold is not positively correlated with stocks, bonds, or real estate. While it's possible to build a diverse, relatively low-risk portfolio with just these three assets, adding some gold can round out your portfolio and reduce risk even further. Regardless of how the economy is doing, it's always a good idea to reduce your risk to an acceptable level. The issues with gold as an investment. There's plenty to like about gold, but it isn't perfect by any means. As mentioned in the previous section, gold's performance isn't positively correlated with some of the most common forms of investment, which allows you to reduce your overall risk. But this is not to say that gold always increases in value. One look at a 100-year historical price chart for gold quickly makes this apparent. For instance, the price was nearly $550 in 1915. But in 1970, the price dropped to under $270. Keep in mind that these prices are inflation adjusted. The price of gold never again went quite as low as it did in 1970. However, it shot up to nearly $2,500 in 1980, and by 2001, it was below $450. It's also worth noting that over the past 100 years, the Dow Jones Industrial Average has seen growth more than 6 times greater than gold. With gold reaching record highs in 2020, some investors have asked us whether gold is a good investment in 2022. Gold is still near its record highs, propelled up in spring following the invasion of Ukraine by Russia. The shock conflict has reminded the world that peace is not a guarantee even in the modern era, and geopolitical issues that have been bubbling to the surface for many years could still threaten to turn into further conflict. From an economic point of view, the sanctions placed on Russia threaten the global economy just a year after emerging from the pandemic. Recession is now once more on the cards for many countries, all while inflation continues to drive price ever higher and cause a cost of living crisis. Rising interest rates have stopped gold from climbing to new all-time highs, but the economic backdrop would certainly suggest plenty of opportunity for gold to push higher still. Read our full 2022 gold price forecast for more detail on why gold could be a good investment in 2022. 3. Gold bullion. Gold bullion is one of the first things that comes to mind when we think about gold. Bullion is physical that has been refined into ingots, bars, or coins. You can buy gold bullion online through licensed retailers. Due to the high price of gold, it's best to deal only with reputable retailers. 4. Gold stocks. Another option is to invest in gold stocks, which are usually gold mining companies. This approach comes with its own set of pros and cons. For instance, gold stocks sometimes pay dividends, allowing you to earn consistent income. However, investing in a single company can be quite risky. Before considering this investment, you should have a thorough of the company's business model and its fundamentals. 5. Gold mutual funds and ETFs. One way to reduce the risk of investing in gold stocks is to invest in gold mutual funds and ETFs instead. Gold ETFs such as GOEX invest in groups of gold mining companies to diversify your investment. Other gold ETFs, like GLD and IAU, are benchmarked to the gold price itself, giving you a less cumbersome way to invest than owning physical gold. Plus, gold ETFs and mutual funds even pay dividends in some cases, giving you the best of both worlds. 6. Gold futures. Like many other types of assets, it's possible to buy gold futures to speculate on potential price changes. Futures allow traders to make large profits in the short term, but they can also be quite risky. Hence, futures are considered an advanced form of trading. Gold has served as a long-term store of value for thousands of years and has often been used as a form of payment. Some investors opt to hold around 5 to 10% of their portfolio's value in a form of gold, whether physical bars and coins or instruments, such as exchange-traded funds, ETFs, to diversify their holdings and potentially hedge against crashes in the value of stocks, bonds, or fiat money. Gold is denominated in the US dollars, which means its price tends to move in an opposite direction, making it a potential hedge against a decline in the relative value of the world's reserve currency. It also tends to gain value as an investment during inflation and periods of uncertainty driven by geopolitical instability or other global events. While other precious metals are also used as portfolio hedges, investing in gold has the advantage of high liquidity. That could allow investors to quickly exchange their gold for cash at any time. Buying gold online has become increasingly accessible for investors. Gold jewelry, coins, and bars are ways for investors to pass on their wealth as an inheritance and are alternatives to holding gold stocks. In the meantime, it must be noted that investing in any financial instrument, including gold, carries risks. As such, no asset can be considered safe. You should always do your own research. Keep in mind that past performance is no guarantee of future returns, and never invest more than you can afford to lose. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.